What's going on, traders? Hope everybody's having a wonderful weekend. Took last week off to doing some traveling, and now we're back in the swing of things. October right around the corner, one more trading day left in the month of September. I think a couple of people, myself included, got offside. September, normally a weaker month in the market, and yet we did have one red week, but bulls came in and pushed it up to new all-time highs, catching some traders off guard as well, which I think really helped propel this last couple of weeks in the market, although momentum certainly seems to be waning. October, seasonality-wise, usually another trickier month for stocks, according to the data and seasonality. But with the surprise in September, anything's on the table. Of course, either way, we're going to follow price action and see what we can take away from the markets in their current view, what we're expecting into next week, some day trading levels, of course, we're going to look at, as well as some other market internals and data points. All this together really helps us kind of build up a thought process and analysis on the market. If this is your first time joining the video, thanks so much for spending the time here with me to prepare for the market. It takes 2 seconds. It would really mean a ton to me if you could subscribe to the channel. Make sure you've got those notifications turned on. That way you are alerted every time we post a new video about the market. With all that said, let's look at the economic report for this week, what we have on the calendar before we get into any of the charts. And as always, this video is for entertainment and educational purposes only, and in no way should be viewed as financial advice. All right, so let's take a look at the calendar here and see what we have in store for us. Okay, Monday, relatively quiet, last day of the month. We got Governor Bowman from the Fed speaking at 8:50 right before the market opens. PMI at 9:45, and then Powell speaks. I believe it might be pre-recorded. I'm going to have to find out a little bit more information about this, but looks like Powell is speaking somewhere right around 2 o'clock at 1:55, so that will be interesting. Not too much on Tuesday that I'm really looking at. We've got PMI again in the morning, well, manufacturing PMI, ISM manufacturing, construction spending, all at 10 o'clock. Not really too much of anything that concerns me. Federal Reserve Governor Cook speaks at 11:10. It looks like we have some more Fed speak after the market is closed at 6:15. More Fed speakers on Wednesday. Who's this? Oh, somebody new. Hammock, welcoming remarks. I guess they're having some type of an event this week. Then we have St. Louis Fed President Alberto. What is this new guy? Mussolini? Oh, we'll see. Okay, then we've got Bowman again, and then we've got Barkin at 12:15. So a lot of Fed speakers there on Wednesday. Initial jobless claims on Thursday, 8:30. Pay attention to that. Final services PMI at 9:45. ISM services at 10. Initial jobless claims really what I'll be watching there. But non-farm payroll, this is the big day for me, and I think really what all the traders are going to be looking at. The unemployment numbers, let's see how they come in. I think this is the most important data that we're going to be getting all week on Friday the 4th. So let's pay attention to that. All right, so we have a relatively quiet week, but some Fed speakers. Markets always keeping everything interesting and on our toes. But non-farm payroll really is what I'm going to be paying attention to. All right, so let's take a look at a blank chart here. We could almost look at the monthly. We've got one more day of price action, though. But it'd be interesting to see the monthly here, how it looks like it's going to be shaping up. Oh, well, it's definitely looking a bit interesting here coming up, and type of a possible hanging man scenario, especially if we get a gap down. But this candle also here was kind of suspicious last month, and it continued to push higher. Either way, definitely looking a bit spicy here on the monthly time frame. But next week's video, we'll look at the monthly chart now that it's totally formed and see what we can take away from that. So just want to take a peek at it. Either way, okay, so we're pushing back here onto the weekly chart. What can we take away? Well, it looks like we tried to push up higher, made a new all-time high, but then came back down. And we're going to illustrate something on the daily chart that's a little bit concerning for me here. But you can really see, and I think the main takeaway, of course, obviously we are in an uptrend, that goes without saying. But I think the main thing that's taking away for me looking at the weekly chart is the size of the momentum, right? We had this huge, the first week of September, huge move down, strong rally back up the next following week, and then the week of the 16th, also decent momentum. But now look at the size of the candle here. Definitely getting smaller. Tried to push up higher, made a marginal higher high, and then came back and back into trading into last week's range. So I think that is interesting, and we'll take a look at this on the daily, maybe a TPO chart. I did post it on my Twitter about what I am looking at as some potential overhead supply inventory really being created on this last push up higher. But we will see how the market reacts. Definitely some key areas that the bulls are going to need to hold on to and really accept over for a chance to go ahead and attack those highs and make another all-time high. But this candle, you can certainly see it's smaller than the previous last week's, and this top-end wick here is definitely a bit more pronounced, showing those sellers not really interested in accepting price up here in the 58.30s. We're also all the way through contract roll week here now, so December, that goes without saying, contracts are in full swing. Okay, so let's get into the daily chart. We'll still keep it blank here, and then we will go on to the drawing set that we already had created. Okay, so the main thing that's really concerning me here, and I think it's a little bit better illustrated, but you can see here we have this type of balance really being created, right? And we pushed up over, and then failed back inside. Now, for me, anyone that is a buyer, that was a buyer, a poorly positioned long, is trapped up in this zone right here. So what are the bulls really going to need to see? Back over, and really seeing acceptance back over 5,800 basically. Otherwise, it's going to be real hard for them to continue the push up higher to attack those equal highs once again. These trap sellers now, more than likely, in my opinion, are going to be selling into any momentum coming back up and giving us the possible traverse back to the other side. And this is really a scenario I am going to be looking at, but there's going to be something very important that they need to hold on to, that halfway equilibrium point, and that's really going to be our deciding factor, whether or not they're going to truly get that push down into the lower part of the balance zone. Now, I could illustrate this, and why don't we pull out the TPO? I just want to illustrate this because it's a little bit, it's a little bit easier to see. And I did post this on my Twitter at _shark trades, _trades. Okay, so here's that balance range that we have been trading in for the past couple of sessions. Boom, 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 boom. Right here, we tried to make the push up higher and came back. We tried to do it again, but what happened? You can see here we closed right down in the 85 area, right down here, this lower part of the day's value area, right? But the main concern for me, as I was mentioning before, is these buyers now are all trapped, So what I'm looking for is if price comes back up to that 5,800 and then possibly sees that rejection back down here. I'm going to mark off the levels just so that you can see them here. We've got the 5,800. Now what's going to be the magic trapdoor? What is going to be that level? Well, for me, the equilibrium here, 50% going to be about 57.70. Okay, so 57.70, under that 57.70, I would really be looking for the complete move underneath into the bottom part of the range, bottom balance, targeting down 57.50, 57.45, thereabouts in that range. So let's see what happens there. I do not like you know how we closed back inside. This idea, of course, is invalidated. Now, of course, we could hold that 57.70, and then we'll make an attack back up towards that 5,800. But they're still vulnerable there. I mean, we could just reject and come back down. What we want to see, if you're bullish, is acceptance back over here. I have a daily or two close over here, and then we will, and these are of course daily candles, we'll come back up and try to match the highs. So those are our two scenarios, right, as far as what I see. Now let's go back here into a regular chart. Okay, now you can also see why these areas are just important from the daily here. You can see, right, this is the high here that we're matching, or the previous high, I should say, at the bottom part of the balance. So it's quite simple, really, for me here. It's either that they've got that trap supply overhead, or we're going to get back above and we're going to go ahead and attack the equal highs, come up higher, or we're under that 70 and we'll go ahead and look for the 50s. If we get back under the 50s, well, then we'll be looking, right, the top part of this previous balance would take us down. So I'm going to say we really see acceptance under 57.45. It would be very likely, in my opinion, that we would maybe tap these high wicks. So I'm going to call for the 57.25, 20s zone. We'll see there. And it could be the buy spot. We start breaking under, then of course we can have a different conversation. But I think that that's fair for now. Let's take a look at their other, let's put this in context from the last time we did a video and look at the chart that we had from last time. Of course, it was 2 weeks ago, so we're working with these old levels here. Okay, so you can see we still have this area marked out, 57.20. Okay, I'm going to make it a little bit higher just to get into those top wicks. So we can put a little, why don't we put a little zone there? Yeah. All right, so maybe first stop, that 57.20. We start to get under that. Maybe we'll start to pile towards that 57.10 area. Maybe 5,700. Either way, what I think is important here for the update, as we already just discussed, was whether or not this new structure will fail us. I mean, it's already failed us. If the bulls will be able to recapture or no. And it's actually too big. Hold on, let me. Here we go. There it is. And we've got our EQ. And it really should be no surprise that the EQ here is the high from back at the 15th, July 15th, 16th. All right. So that's what we're working with right here. We could come down to that, you know, we're at that 57.70. You have to still think to yourself, like, I'm going to try to buy this. It's worth a shot. You might still have some type of reaction there. But, 2 or 3 point risk, risk under the low of the 25th. 3 points. You might be able to get 8 points out of it intraday off that daily level. Which isn't bad for ES. But you still have to be worried about that potential short trade coming in. Again, really, it's going to be tough unless we see that acceptance over that 5,800. All right. Okay, so I think that's pretty much everything I wanted to go over here for the update on ES, the Spooge. Why don't we get a little bit more granular? Let's look at some day trading levels and see what we can take away from those. Okay. Going to come down to an hourly chart here. Okay, so from the hourly point of view, we'll do this later. It's just wanted to extend these. Okay, so if I'm looking at this now, we'll have to see what happens in Globex, but I'm just going to speak in terms of what I'd be thinking if I was trading right now looking at this chart. I'm going to be looking straight right here. We've got structure all up in this area, and we've broken it, right? You can see here double bottom, double bottom, double bottom. Now we've got head and match these lows. Sure, you could think, okay, maybe potential double bottom, yes. And there is a potential trade there, right off of 57.80, thereabouts. Maybe you get a pushback to 57.93. But for me, it's going to be real tough. I got to do this. It's going to be real tough to want to feel bullish unless we're over that 93, 95 area. Need to see acceptance back over here like this for that trend to be neutralized, because then we're no longer sure. We're still making a lower high if we're trading over here from this swing high, but we're not making a lower low. So we're, if we're in this area, it's still a bearish, but bearish to neutral. Back up over 5,800. Of course, we've already been over that as far as a daily level is concerned, but back over 5810, right around here, then I'm going to feel a little bit more neutral to bullish neutral. Down here, it's bearish neutral, bearish to bearish neutral. Up here, I'm going to go bullish to bullish neutral. Up here, back up over 5820, right? We start matching this previous swing high, then I'm going to bullish if we're here. And then we'll look to attack. Whoops, wow, that was really a Picasso. Then we'll look to go ahead and attack up at the highs once again. Okay, but as long as we trade under here, just have to consider this hourly bearish consolidation for some type of a bear flag. We'll go in and attack that 82. Underneath 82, we'll look to trade back down towards, and you can see another balance zone right here pretty much taking place. Look to trade back down towards that 57.70 area. Underneath 57, 82.80. Could say about that, anywhere in there, 2 points more or less. Gotta be careful. Look at the low here, 57.78 quarter. So you got to be mindful of that. But if we come back down again to match that, it would be more than likely telling me that really the buyers are not there, and I don't know how much I would trust another attack underneath. How much I would trust by being a dip buyer underneath 82 again. So I would have reason to believe we would come back down. So it's pretty much a tight range here. I mean, 70, 57, 70. I mean, it's about 100 points, I guess, from here. It's not horrible. Of course, we do have VIX back up at 17 again, so that is going to provide some nicer opportunities as far as volatility and trading is concerned. But just be careful, either way, it's range bound. Right, depending on how you want to look at it. I mean, we've already been over the daily and seen how we're balancing. Under 57.70, well, we've got issues. And then we'll come down probably to 63, and then about 55, more than likely, for the downside attack. Oh. So there you got another target underneath, right there around the 60, 62 area. I'm going to mark off that 5,800. Pretty much right there. Okay. All right. Let's move on to the NQ. The Nasty Naz. Okay. Let me pour a little bit of my drink. Okay. Now, what do we have here? Blank chart. Going to go over the NASDAQ. Very similar type of situation going on as far as the lack of momentum coming in. Now, you can also see, we've talked about this in the past couple of videos, that divergence that we've been seeing between the tech sector and the energy sector, where the SPOOs have seen that all-time highs, where we have not seen that again on the tech sector. So I think that divergence has been very interesting and notable. Certainly something that we have to keep in the back of our mind, because the tech sector really is the foundation of the other markets as well, with Apple being such a big component of the Dow, and of course NVIDIA and their weights with Microsoft and Apple and Amazon, although it's more consumer discretionary, but are all really big beta names that are also associated with that NASDAQ and can be really driving what ES does. So we have to note that. And we've got that similar type of smaller candle here, the upper wick pushing down. We almost made it to the weekly highs at that 2100, the weekly high, the weekly body here on the 15th. Did we actually match it? Very, very, very close to be able to come down into that area. So I think that what we need to do here is recognize Of course, it's a lot wider. This range that we have been trading in, and of course we're looking at the weekly here, so it is a lot more expanded, but this is taking us all the way down to 18,350s to about 20k 675 thereabouts. But we're trapped. And we're not going to reach those highs or go for the liquidity here unless we break up over. Now, of course, this low target is a lot more grandiose than the matching the equal highs. But bigger picture, that's what we're going to have to see. All this technically is noise. Obviously tradable. Right? So I'm going to have that just marked out, and I think it is worth having this marked out. And you can put it, depending on your charting software, you can mark it weekly. Whatever you want. WHB, weekly high balance. So there what that is, and that if we start to get over this 20k 630 area, that more than likely we're going to go ahead and attack the weekly highs from the start of July. And if we break underneath at 18,370, well, it'll be more than likely we're going to go ahead and look for the sweeper down here all the way back down towards 17,370s. So we've got that balance there, and we've got another one right here, right? Pretty much. That wasn't the cleanest drawing. I don't even like that one. There we go. Right? So I don't think that we'll get all the way to the weekly lows of April, but we can get close. So let's look at last week's chart, or the last daily chart that we've been working with. I think it's right here. And let's expand upon it. Okay, so it doesn't have, this one doesn't, excuse me, let's get to the daily. So what else do I need to pay attention to? Well, of course, we've got to hold these swing highs, right? So we've got to hold over 20k 120. Okay, 20,120. And the highs of the 19th and also the 22nd of August there. You can see the reaction here at the beginning of July as well. And June, right here. So, if we start to break underneath 20k 120, looking for the figure at 20K. Then we'll look to see about 19,970. We've got a little balance here. You can see when we broke this structure, we sold, came back, retested, sold. So this area here in the 19,780s, important. If that breaks and accepts on the daily, we'd have to be looking for sells back down. Now, I'd admit we can get trapped up around the 19,525 area. Small balance right here on that bull flag. So it could stop there. Not really enough for me to say, okay, I want to put a level there. But let's mark these off a little bit more succinctly. And give it a little demand zone. And we'll bring this one in here. So now that we have that, I will throw that up there for us. Right around that 19,500. Okay, so underneath 19,775, probably call for down to that 19,500 area. Maybe we get a little bit higher, 19,505, 19,510. That would be what I was looking at. Bottom of this flag balance right here as well. Right? Balance, 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 balance. Change in delivery. Boom, 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 boom. Right? So we got it there. I would imagine that if we break underneath that 85, we'll head back down towards that 19,143, 45 area. Wouldn't surprise me. A lot of liquidity there. Look at the reactions so many times. Right? Boom, 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 boom. Right? So tons of action in that area. It would be a very reasonable target to come down to 19,145 thereabouts. So what else am I looking there for the bull? So if we talked about a lot of the downside there, and usually I like to do the upside first, but so we're holding 20K, we're holding 20K, 120. What's the next big area? Well, you can see where's the next point that the market really shifted. Right, well, we had pretty much back in this general zone. And it is no surprise that that's where we stopped on the 26th, right? This was the previous structure area here, yada, yada, yada. We broke this low, and then that caused us to have this massive downturn once we broke this balance. Now, we didn't get the setup that I like for this, where this price would have come back up, retested, and then we hit the short. That never presented itself, unfortunately. But it's a very similar situation in what I was talking about, the overhead supply being created in ES a little bit earlier, right? So anyone that was long, and who knows, I mean, if they held through that, I can't imagine. But either way, we saw the shift in the market right when it broke down. We come back up, there's still inventory there to sell, and they dump it. So I'm going to mark off this area here as our next big area that we're going to have to see. And what's going to be our equilibrium right there at the turn of the market right on the 17th. And that pretty much lines up with with our, EQ. So I love when it lines up like that. And that's how you know when you're onto something, right? The rule is, create your balance and then you have your EQ. And the price action is really confirming that. I don't have to fudge anything to make that thesis behind the way I look at price to be true. It's just right there. Boom. All right. So we've got two paths. We're either going to get over this the 2560, 20K 560 for more upside, or we're going to break underneath 20K 100, 20K 120, and then we'll see more downside. Be very careful. It's certainly tradable. We're looking at the daily here. It's about 400 points. But really, from the bigger picture perspective, anything in this is just noise. Have to wait for this or this for the bigger move. Anything in here is just more or less creating another balance. Right? So we'll see what we get. It's anybody's guess. Like I said, non-farm payroll to me would probably be the catalyst that could take us one way or the other. Oh, that didn't do anything. But we shall see. We also have some Middle East tensions that have been arising, unfortunately. So that is another potential geopolitical event that may do something to the market. So we have to pay attention to that as well over the weekend. We are also coming up on Sell Rosh Hashanah, buy Yom Kippur. It's an old market adage. Take it for what you want. I couldn't base a trade off of it, but certainly at least in ES with the overhead supply, I could see how the technicals could line up with this thesis. However, I would probably need one more point of confluence to really say, all right, now this is a trade I want to take. That being said, I think I mentioned I took some SPY puts with the room for one ad. I had taken that ad. Full transparency, I am down about 50% on those with the seasonality and the setup that I saw at the time. They are for the end of November. So I do still have a little bit of time, but not that much before theta really starts to become a concern for me. Well, we'll see what happens. All right, let's get into some day trading levels here for NQ. And then we'll take a look around at the rest of the market. Oh no. Okay. Okay. All right, the snazzy naz. Okay. So, we had these lows. Kept on holding on Friday. Oh, it was just boom, 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 boom. Kept on holding. Finally broke them, right? So it's a very similar situation where we're looking at ES. As long as we're holding below, now everything's going to be 20K unless I mention, so I'm just going to say the last three numbers. as long as we're holding below 235, 245 at tops, if we start seeing candles like this on a 30-minute, okay, I'm going to start to change my tune. But unless we see that, it's going to be a little bit tough for the bulls, and really they're going to need over 300. I would not be surprised to see some type of a retest of that 2300 area, but it's only going to be possible if we get over 240, basically. Then we can look to attack. You can certainly look at that point, say, hey, I want to short this. It makes sense, right? This was a little structure. Came back, retesting it. Boom, boom. Do we double bottom there? I don't know. But if you're short, technically you're looking to go ahead and match equal lows once again right down here. That's the day trade. Right, short here. See, take a partial at that 35.40, and then ultimately look to attack the equal lows right down in the 170s. We get back over 300. Then the trade for the bulls starts off with matching these highs. So I would be looking, and where does that put us? About 80 points up higher. Maybe some partials in the 50s. That would make sense. But ultimately looking for the equal highs here. So really, even you could say, I could go to another blank chart here. I could even say, if you want to look at this in our balance theory, you could do this. Slap on an EQ. Boom, a little sloppy there. I'm going to fix it. Boom. Right? So, yeah, you can be looking potentially for, the Globex Open. Is it crazy to think of a long here? No, not really. Because you have nice risk, right? Just underneath. Tight risk. Looking for they pop back up to the 2300. Could get rejected there. Not sure. But if we get over, take your partial. If we do get over, come back, accept, come back, retest. Well, then we're heading up for the 83s. And that's a good trade. Oops. Right. Risking 15 points to get, well, here's about 25, 20, and then the full one's 80, right? That's pretty good. So that's another way you can look at it. All right, let's go back to the day trading levels. Hold on. Oh, no. All right, so let's look a little bit more. We talked about the bull side here, over 20, over 300. Underneath 145, well, then we've got some issues. I really wouldn't be surprised to see us trade down. Under 145, we'll look for the figure at 100. Under 100, looking down to about that 20K. 20K, maybe 25. Right? Under the 25, well, look out below. We're coming into the last week's low area here. Around 19,900. Okay? So that's what I'll be looking at. So we've kind of got our roadmap. Really, the bulls really need to see back over 420, 20K 420. And even then, I could make an argument to say, well, whoops, I can make an argument to say this part area here is like a little balance zone. So even if we got over 420, we'd have to contend with about 450. Just look at the lows from the hourly candle around 5 o'clock on Thursday. So you could try to reach for that. Either way, if it even rejected there but still held over 420, I would be cautious. Even if it came down and held, and then we saw, yeah, you got a little short there, but we held here like this. I'm thinking still we're gonna come up and attack the 540s, 335 area. But all this, regardless, it's got to be looked at as bearish consolidation, right? We had this huge impulse move. Nothing's really looking good for the bulls unless they get over this to really neutralize the trend. It's the same thing here. I'm going to say that this would be just if we stay under here, this is bearish, still bearish, neutral, bullish, neutral. I would say over 2300, and then over this I would say bullish. So bear, kind of getting more bullish, and boom. So that's how I would look at that personally. All right, let's take a quick look around the market. Now let's look at the Dixie. What's the dollar doing? A lot of dollars just been getting destroyed more or less because of the interest rates. Oh boy. Okay, so let's look at this from a weekly. So this was the bigger range that we've been dealing with here. Balance. Well, now look at this. We have a weekly close underneath 175 cents. As long as we really stay underneath 125 cents. It's not crazy. I think we're going to see 99.50 again. Underneath that, well, we've got this balance zone here. Right here. Right, so underneath that, and so underneath 99.50, we'll make our slow and steady way, I believe, to 97.50, 97.60 area. Pull out one more chart. You can see top part of the balance here. Any of this area, you gotta. I mean, the risk, as far as the risk to reward is concerned, the long trade is there. If that's your fancy, I'd maybe wait for the double bottom. But we are in the dumps here, and it'll be interesting to see if we get the dollar starting to move, how the market's going to react to that. So it's in the buy zone for now. I'd like it a little bit lower, but... And also, look at the Momo. I mean, we are just in the dumps here. I would not be surprised to see the dollar making a move within this month, the next 2 weeks. So we'll see. TNX, we're looking at the yield here. Still just looking like a bear flag. All this just bearish consolidation. And expect just to, unless we get over 40, it's just bearish. Under 36.40, under the 46, 36.40, then we can go ahead and attack. Down towards 34. 33.80. So not really too much has changed here. Okay. Let's start off with the VIX. Put call ratio coming to the lower end of our normalization zone. Nothing really too extreme there that's giving us anything for any real counter trend trades. But let's look at the VIX. Well, I noticed that VIX was not breaking 15. And I thought to myself, well, we still have some issues here. Look at this. I mean, right here we've talked ad nauseum. Anywhere from 15 to about 15.75. VIX is still has the potential to move up higher and to still be elevated. We saw that here once again. Pure acceptance now from the daily chart over that 15.75. I would not be surprised to see VIX start to creep up. We're at 17. I would not be surprised to see VIX back at the 19 handle within 2 weeks. Definitely 18, I think, is going to be on the table for us. Just look for something like this. Right, and we'll just see. Yoink, 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 yoink. Something like that. Curve it on the buy side for VIX. Let's get under 15 for the bulls. Otherwise, they're vulnerable. Gotta say here, starting to, touching that oversold. Not deep, but it doesn't seem like VIX likes to get there too deep in it. So, hasn't started flashing green, which is interesting. Let's see what happens Monday, Tuesday, if this actually starts to turn green. Watch out. So, VIX, I would say, is a bearish data point for me. Macro level, macro stuff really quickly. And we'll look at the 1-day VVIX. Well, here is the spread. 10 and 2 year yield curve. Oh, well, this is really not what you wanted to see. Continuing to steepen over the zero line. We had readings at 9.09. Now we're seeing readings at 20 or 0.20. It still continues to re-steepen. This is a recessionary viewpoint with this going on. Not good. You can see what happened when it reaccelerated here. Okay. So we'll see. VVIX also coming down around that $7 area here. No surprise that we are seeing somewhat of the volatility creep back in. But VVIX, if we see it back over 15, then we've got a little bit more of an issue to come into the 20s and to see more volatility and potential downside here. So that is interesting on the VVIX. Let's look at how many stocks are trading over their 200 period moving average and their 50 period moving average. Really nice bounce here. We came into that 75 area, held it. We're not quite in contrarian. I mean, we're matching these high readings here, but we're not in that extreme contrarian area quite yet in the 90s. We're at 82% of the stocks in the S&P trading over their 50 period moving average. Let's see what happens if we start to move up a little bit higher for a true contrarian signal. The 200 period moving average almost there in the sense that it's been balancing and we're almost at the high of that balance. Not quite there yet. Those readings were at 79%. Those readings are about 82%. A lot slower moving, of course, here on the 200. Nothing really contrarian here to look out for. Everything looks bullish here. New highs versus new lows. Well, the 400 reading definitely showed some resistance. Back down under 270. Still well over 100. So really nothing to be concerned about here as far as breadth is concerned. Everything is looking still strong. Let's look at the junk bonds. Or maybe not. Oh, here it goes. Wow. And they are just flying higher and higher and higher again. We've mentioned this last time. Why, if you're concerned at all about recession, why are you buying this crappy high yield junk bond? I would say this is the one counter data point to any type of macro concerns being put in the market, as this just continues to drift higher. And if we even want to look at LQD, we looked at this a little bit last time. The corporate bonds flattening out a little bit, but still strong. I mean, we didn't make a new higher high, but it's not like we're seeing anything that's saying this is going to be dropping. A little bit starting to get overbought a little bit, but not anything too crazy. So, at least as far as the bond market is concerned, they would, trust me, they would not be in the junk bonds if they were scared. So I think that's interesting. But what throws me off personally is that the 30-year is still, it's come off a little bit. I honestly wouldn't be surprised if TLT just started to run sideways for a bit now and move some consolidation. Had a huge move on our retest. We've kind of been pretty much bullish since we've broken out of this channel in the 90s. And we've had a great move. Now I think it's time for a bit of a rest period here. But for me, before, when I saw this rally, that flight to safety, we've talked about this with gold as well, which is continuing to make all-time highs. It's two counter data points, and to be honest, it's a little bit confusing for me, seeing both these kind of opposing data points. But I think that we're at a real risk here with the Fed getting stuck in some stagflation with GDP, and I think that we're going to have to see really what these job market numbers are. To me right now, the job market numbers have become more important than CPI. Kind of mentioned that, but either way, we are still really, the Fed's really trying to thread the needle here with that 50-point basis raise. Are they trying to get ahead of it? Are they too late? There's many schools of thought. I think 50% was a bit aggressive, but what is the 50% really saying? Well, it seems like it's saying to me that they're afraid that the job market they're trying to get ahead of any job market losses before the economy gets quote unquote too weak. Can they do it? I don't know. That is anybody's guess. All right, what's going on in VIX futures? Oh, still in backwardation here. Couldn't get over the zero line. Interesting. VVIX, yeah, it's not really over the 103, 105, but threatening. I would say, unless this starts to really get over that zero line, that's going to be a little bit of a concern. Still some risk that they're placing in the market in the future. So you're getting some mixed signals here. What's going on with transports and the Dow? Dow making new all-time highs. I think also the Dow making new all-time highs would be a little bit more of that flight to safety, kind of in a value type of perspective. Seeing the Dow push new all-time highs, but having a very similar situation as the rest of the markets with this balance. Pushed over, fell back inside. That's not what you want to see. The Dow might threaten, I'm going to call underneath certainly underneath 42,000. I think the Dow will come down to 41,800. Under 42K. That's my thought. Same look above and fail type look here. Transports, look how many times it's hit this high. Definitely in a pullback zone as well. So I think the bears are trying to sneak out a little bit of an edge here overall. The bulls have proven strong time and time again. Let's see what the non-farm payroll numbers look like. Unemployment, we also have other job data on Thursday, but non-farm payroll will be the main one. Either way, I think we have a solid plan for intraday and our daily time frames to have our bias be set. And I want to really thank you guys for spending the time with me this weekend preparing for the markets. Remember what we always say, a prepared trader is a profitable trader. You make your money when the market's closed, not when it's open. The preparation is always done before, and then it's just a matter of, well, if the market does this, then I do that. If the market does that, then I do this. And that's why we do this every single week. And that's why you should too, whether it's with me, yourself, or anybody else. But I appreciate you taking the time and spending with me here on the weekend. Plan your trade. Trade your plan. A prepared trader is a profitable trader. Let's have a great week. Last week was a little bit tricky with the consolidation. Let's see what we get. Do we have some range expansion? Do we finally start to see a real nice trend day? I don't know, but we've got our levels. Again, have a great weekend. If you haven't subscribed to the channel, it would mean so much to me if you do. Really helps. Thumbs up really helps the algorithm. Love you guys. Take care. I will see you guys on Monday. Full week of trading ahead. Let's do it. Let's rock and roll. Love y'all. Take care.